Good afternoon. Welcome to Monday the 17th of November. Okay, very quickly, before we even get started, we put down our objectives. Okay, what's the date today? I'm going to show you guys how you all know the analogy of seeing the forest or the trees amongst the forest, or seeing the forest being the big picture and seeing the individual trees. Okay, you all understand that analogy, and I hope you all understand that, because at the beginning, trading seems as though you're on this path towards nowhere. Okay, and every day you sit here and you become better at one thing, and then you become worse at another, and then your consistency goes, and then that happens, and this happens. All sorts of wonderful things happen. Okay, and sometimes you just actually need to look ahead and think, what is the big picture? Okay, so I'm going to show you a little example. What is the date today? Okay. So effectively, how many days do we have left this year?
30.
30? You want?
Trading days.
What if I told you you've only really got about 15 trading days left this year? Okay. I'll put it into perspective for you. How many trading days do we have this week?
4.
Okay, so we've got 4 left. What's next week? What happens at the end of November in the US?
Thanksgiving.
Okay, so Thanksgiving, effectively next week, Wednesday, Thursday, and Friday is going to be affected by Thanksgiving. Okay, so we've got 2 trading days next week to make some money. There's 5 days left in November. Okay. And roughly we've got about 10 trading days in December. The year's done. Okay. Bigger picture. What have we got in December? Well, we've got an ECB meeting. Okay, we've got a Bank of England meeting. We've got the FOMC. Okay. Is the Bank of England going to do anything? Okay. Can they come out more dovish than they already are? Okay. Is the ECB going to do anything? Okay. What has Draghi constantly told us? He's told us they've got to wait for the TLTRO. Okay. They've got to wait to see the impact of all of this. Okay. They've just started ABS purchasing, so it's very unlikely the ECB does anything in December. How about the Fed? Yeah, they could throw up something. Okay, but what has the Fed said all along? They are data dependent. 15 days, guys. That's all you have left of 2014 as a trader. Okay, make the most of it. Every day you come into these debriefs, learn one thing. Okay, I'm going to start making these nice 40, 45 minutes long. Learn one thing. Take away one thing from this debrief, and make sure every day you learn something. Okay, so what is in it today? What are our objectives for today? What do we do every Monday? Good. So we're going to have you guys noticed how much nicer I write for you now? Fundamentals. Okay. What else do we do on a Monday? Good. So our week ahead. Okay. Number 3. I'm going to show you something which none of you have probably seen. Okay. It's where you get fundamental gaps in the market. Okay, you finally got into experience today. Okay, but effectively what you saw overnight was, and what you saw early this morning was a fundamental shift. Okay, it's where value is perceived elsewhere in the market. Number 4. Okay, I'm briefly going to go through the Bund gap. In fact, the Bund gap will come pretty much with that. And then number 5, we're just going to have a look at the stocks profile. Okay, simple, nice and quick, nice and easy. So, overnight, what was in the overnight? Okay, right at the top headline, bang, Japan. What happened in Japan?
Temperature recession. Technical recession. Okay,
good. What was expected?
2.2.
Okay, 0.5 in the Q and Q, what did it come out as? Usually 0.4. Not the, I want the... Okay, yeah, minus 0.4. Okay, so effectively, Japan's gone into a technical recession. Now, why is that big in the big scheme of things?
Because it adds to the picture of global weakness.
Brilliant. So we got this continued global weakness. Why else? How big is Japan in terms of the global economy? Okay, so if Greece came out and went into technical recession, does it matter? Okay, they don't contribute much to the world. If Japan, the 3rd largest economy, okay, major exporter, comes out and goes into technical recession, that contributes. Okay, knowing that's important. Okay, what else?
What measures are not effective.
Okay, brilliant. Okay, so we're going to start touching on something. If you go back in history, okay, you're going to see that Japan in 1998, 1997, when they had the financial crisis, okay, they tried to increase VAT. Okay, they tried to generate some revenue from increasing VAT. What happened? Okay, and I urge you, if you've got some time, go type in Google, what happened when Japan increased VAT back in 1997? Okay, what you're going to see is that inflation went very much up, okay, and growth went the opposite direction, similar to what we're seeing today. Okay. More importantly, what did Japan do 2 weeks ago? Okay, so do you think Abe had this data already in his hands? Okay. It seems a bit obvious now that he did have this data. Okay, so he's almost front-run the market ahead of the whole GDP number. Okay, more importantly, guys, you've got to start asking yourself questions. Why can an economy not get out of a recession? Why can it not create inflation when money is as cheap as money can be? Okay. Basic economics. If something is as cheap as chips, why can this economy not grow? Why are they not generating inflation? Okay, there's a lack of demand. Okay. More importantly, what is this going to mean for the rest of the world? Okay. If Europe goes into this sort of type stagnation, okay, what's that going to mean for the rest of the world? What happens if the two largest economies in the world are not growing? What then? Okay, so those are questions you start thinking about, guys. I know it sounds doom and gloom, but we've spoken about it. We've spoken about this. If there's all this cheap money in the system and we're still not creating growth, what then? Okay, are we as a generation entering effectively the next slump, the next recession, the next 10, 20 years of backtracking? Okay, good. Anything else in the evidence? Oh, there are a few interesting things, yeah?
The G20?
Okay, good. So what did the G20 in summary come out with?
The thing that actually stood out was that Putin left.
Okay, good.
Possibly some more sanctions.
Good. Okay, so more sanctions for Russia. Okay, but a little bit more of what is the G20 meant to do?
They were discussing something about global growth.
Good. G20 always comes out and discusses global growth and how we're going to create initiative or incentives to get the economy growing. Okay, and they aimed at a 2.1%. I don't even know when it was for. Okay, but effectively they come out and they said they're going to try and reach this target. Okay, so again, the G20 has been known for all talk and no do. Right, but what happens if now, for the next couple of months, actually they do come out with something effective, some sort of a mass, sort of big surge into the economy, government spending a lot on infrastructure. Okay, how's that going to impact? Okay, so keep an eye on this because you've heard a lot about this from Germany, why they're not doing enough. Japan, why they're not doing enough. China, why they're not doing enough government spending. Okay, so everyone, all the G20 are urging governments to start spending again, get the economies going again. Okay, so just listen out for that. Make sure, the important thing is make sure you know how you're going to trade that. If it comes out bang tomorrow, Germany's going to intervene, they're going to spend 20 billion in infrastructural spending, and how are you going to respond? What are you going to eat? How are you going to trade? Okay, that's what's important about knowing this. Okay, good. Anything else in the overnight? There's one more that came from S&B's Jordan.
Oh, the questions say no, basically.
Good. Okay, so he's basically said it will threaten the Swiss franc cap. Okay. And he's kind of come out and said it'll increase risk of recession, deflation risks have increased. Okay, would not set up a sovereign wealth fund. So effectively, he's come out all doom and gloom. Okay, so they're worried about this referendum. The market will equally be worried. Keep an eye on gold, keep an eye on the Swiss franc over the next couple of days. Okay, you'll more than likely hear me getting all excited when something starts to go through. Okay, it'll be very obvious when the pricing's there. So when it is, record it so you can watch it for a later stage and learn how to trade it. Okay, then one last thing. John posted something this morning, FT article. What's the headline? Sovereign debt rule change could prompt 1.1 trillion rebalancing. Okay, what was the rough? Did anyone read it?
Yeah.
Okay, what was the rough idea about?
That now banks, for example, Italian banks hold too high percentage of Italian sovereign debt.
Okay.
So the trend should be to avoid that when there is a crisis in a country, also the financial system is affected.
Okay.
They
So
have to change.
brilliant. Okay. So basically, a bank's future should not be dictated by a country's future. Okay, that's effectively what it is. So they're basically saying to protect banks, they should only be allowed to hold a certain percentage of their government's bonds. It's as simple as that. Okay, so they ran a stress test and they said, well, if we were to reduce that to a maximum of 25% of holdings, effectively 1.1 trillion would need to be rebalanced. Okay, so whoever holds more than 25% of their own government's bonds would need to sell those and hold other bonds. Okay. They even did a further test. They said if it went to 10%, which is what a lot of people are pushing for, okay, that would do something crazy like, what was it, 1.8 trillion or something. Okay, so just remember, just think what 1.8 trillion of rebalancing would look like. It would be absolute crazy, guys. Okay, yes, a lot of it would be done in spread type moves, okay, but you'd be able to make some amazingly easy money. Okay, if you know that German bonds have to shed $500 billion and French bonds have to get $500 billion and maybe more has to go into Greece and all that, whatever the percentage may be, okay, you'll see those spreads playing out in the market. It'll be very aggressive. But again, they're talking about longer term. This is not something they'll just drop on the market. They'll say you've got 5 years to rebalance. Okay, good. Let's go through the week ahead. What about today? Anything significant? Did you see anything significant? Okay. So had we not had the Japanese GDP overnight, do you think the markets would have moved today? Some answers. Probably not. Not no, probably. Okay, so it's probabilities. Unlikely we need any significant market moves. Okay? So what do we have tomorrow?
CPI.
Okay, who's CPI? Okay. Why is that important? Particularly, why is it important?
So worried about deflation.
Okay, so we're not necessarily worried about deflation in the UK, but why else? Why else is the UK CPI particularly interesting tomorrow? Okay, I'll give you a clue. Giannis, I'm going to play a little game with you. Okay, expected tomorrow is 1.2% year on year. Oh, sorry, it was 1.6. 1.2. Okay. So 9:30 comes, and bang, number comes out as 1.1%. What's your initial response? What's your initial thought? You're a pound trader. What are you going to do in the pound? Ooh, come on, you can't take that long to think about it. Help him out. Who wants to trade pound on this? No one wants to trade pound, so we're just going to miss this opportunity.
So,
Okay, good. So we all agree that initially we should see some sell-side offer in the pound, of course. Okay. Now, why would it not be altogether unexpected that a market could retrace that entire move?
We already said they're expected to be that way.
Very interesting, guys. The fact that we have CPI tomorrow is crucial, okay? Because Connie's already told us that he's expecting inflation to go down below 1%. He's fed the market that information. He's given the market that information. So therefore, the price in the pound should be reflecting that information already. Okay. So when the market is ready for reflecting information, that's when you get some gorgeous reversal type trades. Okay. That personally would be my strategy playing for that pound tomorrow. Any kind of a downside beat that cannot hold an offer, I will be aggressively lifting bids. Okay, because I understand I'm already ahead of the basic retail investor that doesn't realize that Connie has already told us what he expects going forward. Okay, you understand that. So important to understand, guys. Remember, the price reflects forward information. Okay, don't forget that. Okay, so what else do we have out tomorrow?
PPI in the US.
Okay, the
PPI.
okay, yeah. Secondary data. What else do we have at 10:30 tomorrow? Or 10 o'clock. What do we know about zoo? Okay. More importantly, though, we know that it moves the markets. The markets start to become awake when there's zoo. Okay, so very important, guys. What do we see in the European bonds today, particularly Germany? Okay, who traded the bund today? Okay, did it open up a little bit today? Okay, not initially. Did it feel like the bund sold off 60, 70 prices today? In your opinion?
when it first opened, it was really slow.
Okay, good. But effectively what we've done is, that's what we've done all day. We've had a trend down day in the book. Okay, it didn't feel like it. As a day trader, it probably didn't feel like there was easy opportunities to be short. But price has told us a different story today. Okay, so again, there's a little bit of activity in the bunds today. We didn't see anything last week. Maybe that zoo gives us either a continued move or maybe finds a low and then we do a reversal, but it might just wake the market up a little bit. Okay, good. What are we about on Wednesday?
Within a minute.
Good. Okay. Wednesday we got the BOE. Do we have BOE minutes?
Yeah, the interest rate decisions. No, nonsense.
Okay. What else do we have in the morning? In the morning we got the Bank of Japan policy statement. Okay. And then what do we have in the evening? Very important. Okay, so we got the FMC minutes. Okay, market will be waiting for the FMC. Remember, the entire market is now kind of waiting for the next clue as to how is the Fed going to progress. Okay, we know they're data dependent. Okay, but what are they thinking? What are they thinking about all the deflation around the world? Do they think it's going to slow down their progression path and maybe interest rates are getting ahead of themselves again? Okay, what do they think about the current environment? Good. Thursday?
USCBO.
Okay, let's start from the beginning of the morning. Always try and start beginning chronological order. Even before that. Okay, we've got HSBC. Okay. Market mover, guys. Always moves the S&P, so look how the S&P responds to that. Okay, could give you an early guide as to how Europe is going to trade on Thursday morning. Okay, more importantly, we know China is in the news. We know Japan has just come out in a technical recession. Okay, so any of these growth type factors, if China suddenly starts to slow even more aggressively than expected, okay, how's the market going to respond to that? Okay. Then we got French and German PMIs. Okay, so again, European growth, how are they responding? Okay, UK retail sales, and then what do we have at 1:30? Okay, and it's more important. Okay, US CPI, guys. The Fed are what they are. Data dependent. In our FOMC rundown, what did we say the most important data coming out of the Fed are? Inflation and? Why is inflation and unemployment the two most important data pieces? Okay, because the mandate. You guys are learning. Good. Okay, so we've got one of their mandate data pieces out at 1:30 on Thursday. Okay, key event Thursday. Good. Okay, Friday, anything else? Okay, nothing major, a little bit of Draghi speaking in the morning. Okay, so where are our key risk events this week?
Wednesday, Thursday.
Awesome. Okay, even Tuesday you've got good risk events. Okay, good opportunities. Okay, so simple. That's where we allocate our energy to. That's where we get aggressive in the market. That's where key support levels, key resistance levels, key trend lines, that's where they get broken. Okay, when people get forced around in the market, when liquidity gets forced into the market. People have to act. Okay, everyone happy with that? Yeah. Good. That's the week in summary. Let's move on. Make a nice big headline at the top of your page. Okay, you haven't seen this before. None of you have seen a fundamental gap day. Okay, it's a very specific day type. Fundamental days. Okay, now if you follow me on Twitter, you would have seen me tweet something very early on this morning. Okay. I wrote, just because Japan has gone into a technical recession and the Nikkei is down 3% does not mean that the European equity markets cannot rally today. And I finished off by saying, trade what you see, not what you think. Write that down. Trade what you see, not what you think. It's so important, guys. I promise you, every one of you are going to get trapped in this at some point in your career. It's called a bias. Okay, and the only reason you get trapped there is because everyone else gets trapped there. Japan has just gotten into a recession. You come in, the Nikkei is blood red, is down 3%. The whole of Asia is down. Australia, Hang Seng, Taiwan, everything is down. Okay. Not only that, but you've just seen the bond markets. Yields are up on the day, 2-3 basis points in the US. Okay. Not only that, but gold is bid, the dollar is bid, the yen is bid. Okay. Everything is pointing to risk off. Okay. Not only that, but well, not even a month ago, on October the 15th, 2014, okay, the S&P sold off 50 handles and then rallied 50 handles in the same day. Okay, on the back of global growth concerns. So the third largest economy has come out now, okay, and they've just said they're going into a technical recession. Who's to say we're not going to get a 50 handle down move? Okay, who's to say those panic moves aren't going to come back up? Okay, and that's the way traders think, guys. They base their decisions on previous patterns. Okay. The lesson I learned a long time ago, we came in one morning, all the equity markets were in a bear trend. Okay. Overnight, it was 2012, Spain got downgraded. Okay. The stocks came in, it gapped 30 ticks lower. What do you think it did on the day? It rallied 3% today in a downtrend. Okay, so the first thing to note about fundamental days is what? Hey?
Doesn't do what's after what people think.
Okay, so trade what you see, not what you think, Z. Okay, so what is the first clue that we can see that this fundamental gap in the market is struggling to hold?
Well, it means if it says there's a level of support and it fails to really break the level of support higher, that's the first clue.
Okay, good. Anything else? Anyone got any ideas? What is the first clue that a market is not holding a fundamental gap? Okay. I gave it away, didn't I? Okay. So if it closes the gap, that is telling you that actually that fundamental, which has shifted value in the market, is actually not as strong as what the market perceives it to be. Okay. And yes, unfortunately, the gaps you guys would have seen if you traded Euro stocks was an overnight gap. Okay. It wasn't so much a out of range gap. Okay. So you got two gaps. You got the out of range gap. Okay, and then you've got the within range, but you've got it on the overnight close. Okay, so your step one. Okay, what do we know about gaps? What do we know about gaps?
If it closes the gap, it should carry on.
Okay.
So if it fails to close it, then
Brilliant. It's as simple as that, guys. So as a day trader, when you come in, do you think there is value in trading Japan being downgraded at 7 o'clock in the morning?
Yeah.
Okay, Ben says yep. Anyone else agree? Come, you have to do something. Bang! Japan's in a recession. End of the world, we're not growing. Okay.
It's already priced in. We must have.
Very important, guys. The reason the market gaps is because it's pricing the information. Okay, so where is the opportunity in a fundamental gap? And this is the trade for you. Okay?
The blips.
Pay for the gap fill. Simple as that, guys. It's a bit like poker, see? Why do you want to be the aggressive person and put chips in the pot? Okay, because if you don't put the chips in the pot, someone else is going to do it ahead of you. Okay? And then you don't get the information you desire. It's the same in this situation. If you play for a gap fill, okay, you are going to get a lot more information out of being involved in that trade because you're going to feel the information. You're going to feel how aggressive the market wants to fill that gap. Okay? So that's step one, is look for the fill of the gap. Okay? Step two, if we fill the gap, okay, what does that mean to you as a trader? That is the clue to fundamental days. Okay? If a market does not fill a fundamental gap and takes out the starting price on the day, what do you think is likely to happen on that day? Okay, it's going to continue the trend, and the fundamental that's come out is huge. Okay, those will be things like, for instance, if Draghi overnight comes out and says something like, we're not going to buy German bunds if we do QE. Okay, the bund will gap, it'll price in a fair value, it will go bid, it'll try and fill in the gap, but once it goes off it and takes out that starting low price, you're going to get a continuation type move in that direction. The gap holds, the strength of the fundamental gap holds. Okay, so your biggest clue on a fundamental day is, does the gap fill or does it not fill? If it does not fill, it's simple, play the trend. If it does fill, that's when you need to start being a little bit cautious. Okay, yes?
So does that mean that Japan is no longer relevant in terms of QE and further stimulus or
Okay, it doesn't necessarily mean that Japan's no longer relevant.
in general.
Okay, what it potentially means is, remember, GDP is a lagging indicator. Okay, so it may just mean that the market is almost already priced that Japan was going to have weak fundamentals. Okay, I know that sounds almost absolutely ridiculous. Okay, but the market's perception of that number is clearly not as worrisome. For whatever reason it may be. It may become bigger down the line, but right now the market is not really worried about Japan. Okay, it may be a case of Japan hasn't grown for so many years, they're not contributing to the global environment anyways. Okay, so let's do the two little gaps for you so you can get a little visual aspect of this. Okay, and what's nice and why I want you to look at both the Bund for your homework and the stocks is because one of them was a range gap and the other one was a within range gap, so you're going to get the two ideas. Okay, so the Bund opens, gaps. Okay, that was Friday's high. What do we tend to get when a market gaps above a previous day's high or low? Okay, we tend to get a few stops. It's as simple as that. Put yourself in the position. Imagine you were short here over the weekend, okay, and you had a 8-tick stop. Okay, on the open, what's going to happen?
It's gonna be trend fair.
Okay, so if that's 10 ticks higher, effectively you are stopping out at the market open. Okay, so that's what happens. That's why you get the stops going through, because people stop out at the market. It doesn't matter if they stop with 6 prices or 4 prices. Effectively, they're stopping at the opening price, and that's why you'll get a little bit of a flush up first. The stop's being taken out. Okay. What I'll tend to always do on a gap day is I'll always be leaving offers up the page, looking to get filled in on that flush, looking to get involved on people's stops at market. Okay. Why does this work well? Well, it's simple. Remember, the gap or the fundamental gap is fully priced or should be fully priced at the opening price. Okay, so that last little flick up you're seeing is just residual. It's just last minute stops going off in the market. Okay. The difficulty with this trade is how big are those stops going to be? Okay. You've got to have a pair of balls to take this trade on, because I've seen stops of about 30 prices and I've seen stops like this morning of about 5 prices. Okay. That comes down to your experience. If it's a huge level, guys, let's say the Euro stocks open below 17s. Okay, we all know 17s was quite a key little level. Okay, it could have very easily had maybe 10 ticks of stops. Okay, so that's how you got to determine it. How big is the level that it's opening above or below? Okay, what's the level of big players being willing to stop out there? Also, what is the trend? Okay, are there shorts in the Bund? Is anyone short the Bund? No one's short the Bund. It's a long-only market. We're in an uptrend. Equally, the stocks is also a long-only market. So had we opened below 17s, well, that is against the trend. So there might be some locked-up positions there. Okay, good way to understand. Okay, so Bund fills in, and then what does it do? It ticks down gently, and then goes and tests the gap. Now, what do we know about a gap fill? What do we do every single time on a gap fill? Okay, why do we front run it? Why do we put our risk there, Alessandro?
Good question.
See? Good risk reward for one, yes, why else? Is this fundamental of Japan still in the market?
Because proves that we
No, hold on. Okay. And I mean, this is very early on, okay? Is the fundamental of Japan still in the market? We're talking from the hours of 7 to 8 a.m.
Yeah.
Okay, of course it is. Okay, so what's the bias in this market? It should still be long. There should still be loads of locals looking to buy their market. Okay, if Japan's moved the market. Okay. Why else do we go and play for that gap fill? I said it right at the beginning. Why do you take control of a pod, see? Okay, so you can pay for information. You don't want someone else to dictate. Okay, if you go and put a bid there and it suddenly goes and fills you and blips 5 ticks inside, what is that telling you that's happening down there? Okay, there was a panic to get long there. Okay, what does that kind of information tell you? It tells you traders want to be long. Whereas if you just sit there and you don't partake, okay, you might be looking at your chart, you'll never actually see the price action down there. Okay, so by buying a gap, okay, yes, of course you're going to make winners and you're going to make losers, but more importantly, you're going to get information. Okay, that's why we play gap fills. Okay, so you get the gap fill. Bang, it bounces. Yes, it happens to bounce. Now remember what I said to you. This market has 2 options. It can go and take out the high and continue the trend, or it can come back below the gap and start to get into previous days value. Okay, where you have to be nervous, and this is a Josh Cotter special. Okay, I hope he's listening to this. Effectively, if a market gaps, Okay, that's your value area. So long as it remains out of the previous day's value area, okay, it could still very easily build a profile outside of value. Where a market starts to become dangerous is when it gets back into previous day's value. Okay, because then it's very suggestive that actually this market's going to keep going down. Okay. More importantly, at this point, is the market long or short on the gap fill? What is the, let me rephrase it. What is the bias in the market on the gap fill? What is the bias in the market on the gap fill?
Short.
Okay. Okay, still long. Okay, I'm talking, think bigger picture. Okay, so the bund comes in. Let me just draw it. Sorry, I want you guys to keep with me. I'll illustrate it a bit better. Okay. So the bund market opens, comes down, fills the gap. Okay, we are looking to do what now that it's filling the gap? We're looking to buy, of course. Okay, the bias is still upward. Okay, market goes, forms a little bit of value, comes below the gap and into the previous day's sort of rejection zone. Okay, what are we still looking to do in this market? We're looking to be short or long? Okay, wait for a pullback. Okay. Very important, guys. On a fundamental gap day, on a trend day, stay with the trend, stay with the fundamental as long as you can. Don't give up on that fundamental for the simple reason that no one else is giving up on it. The entire market is still looking for longs until a certain point. Okay. And that certain point is when we re-enter value areas. And you'll see this both in the Bund today and you'll see it in the Eurostock. So that is your homework. Go have a look how the price action, how the volume, how the speed changed once we re-entered previous day's value areas. Okay. You said earlier, it's very slow in the Bund, very, very slow. Watch what happened once it got back into value. Look at the speed of down move. Okay. Equally in the stocks. Okay. The stocks is a little bit different because of where it opened. But once the stocks got back into Friday's value area around 35s, how quickly did it get back up to 55s? Okay. A lot quicker. Okay. Any questions? So that is your key point, guys. Your value area high or your value area low on a gap day is that key trigger point when the market is now no longer in the fundamental bias. It now needs to switch the other way. Okay. And it's a very good trade to be aggressively looking for re-entry into that value area simply because day traders, locals, retail investors are very slow to switch. They're all still stuck in Japan when we're over here, and over here, and over here. And eventually they give up because their risk manager says you stopped out. Okay, does everyone understand that?
Yeah.
Everyone happy with that?
So, quick question.
Yes.
With the value area, say like today, you could have done it from like a weekly profile.
Yes.
For the value area.
Yes.
So, would you use the daily or the weekly? Or
Okay, I would tend to use a daily simply because it's a little bit closer.
Yeah.
Okay, you could use weekly, and I'll show you where the weekly will come in handy. We'll use the Eurostox as example. Okay, so very briefly, the Eurostox. Okay, we've been speaking about those 17s, 18s, 19s. Okay, it's a double bottom in the weekly. Okay, it's a key support area. So long as that holds, the Eurostox maintains the gradual drift higher. Okay, so the market opens around 22s, I think it was 23s. Okay, instantly finds an offer. Or did it go bid first? Okay, effectively did something along those lines. Okay, it then went and tested 17s. What did it feel like down there? Who was watching the Eurostox?
We got rejected, sort of like extended the previous days
Okay.
range a bit. And
Good.
then
How quickly did it reject it?
fairly, there was no sort of big volume move or anything.
I want you to go have a look at that low.
It was a little bit better, it was a little bit slower.
It was very slow. There was a lack of commitment from buyers. Where did the move come in the Eurostox? Where did the volume come from? What time? That's very typical.
Cash.
Okay. Here's your clue, guys. When you're playing these gap fill days or these reversal type trend days, okay, it's the cash you want to wait for. Okay, the cash is obviously there's two trades. Okay, if there's a technical gap, you've got to trade that in the initial balance. Okay, but more important is once it gets back into value areas and all that, you want to be doing that after 8 o'clock because that's when you're going to get your speed. Okay. Had you been buying 18s, 19s down in the Eurostox, okay, early this morning, yes, that was the right trade, but you wouldn't have been paid for it. Okay. It wasn't an easy trade. You would have felt like, what's going on here? This feels so heavy, this is going to collapse. Right? It's only once 8 a.m. came that the Eurostox rallied the other way. Okay. More importantly, what did we have in the dailies and the Euro stocks? We had an inside day. Okay. So effectively, we extended the inside day, failed to break on the inside day. Once the cash opened the market, then negated away, took out the top of Friday's high, and has now continued in a very bullish manner. Okay. So again, go look how the market responded once it entered the value area low and got above it. Okay, and look how quickly it got to the value area high. Okay, because that's where your trade is, that's where your easy money is going to come from. And you'll understand fundamental gap days now. They come 5, 6, 7 times a year. They catch a lot of locals out because locals get stuck in a bias. They trade what they're reading, what they're hearing from the guy up top, instead of trading what they see in front of them. Okay, believe it or not, yeah, the Euro stocks can collapse 30 ticks in the open and then rally 3% in the day. I've seen it, and so have a lot of senior traders. Alright, Bund, Euro stocks, 2 beautiful examples of how to trade fundamental gap days. Please print them off, save them in your playbook. You're going to get them every now and again. Okay, any questions about that? Good. Alright, let's move on. So I've explained the book gap to you, and I've pretty much gone through the stocks with you. Okay. So the last thing I'm going to leave you with. In fact, I don't need to do any charts. Simple as this. Okay. What have we seen in the bunds today? Okay, so we opened at the gap. Okay, we came back into Friday's range, went all the way through Friday's range, left a few singles on the way, and went right through Friday's low. What do we call that?
Outside day.
Okay, what do we know about outside days? What do they represent?
Wrong conviction.
Okay, so we've got potential sell side conviction. Okay, why is that important to know, Ben?
Say if we come up tomorrow and retest the low again, you know to expect a lot of sellers to be there.
Okay. Let me ask you this. What is the probability that this market will rally all the way to today's high and extend it tomorrow?
Low.
Why is it low?
Because there'll be a lot of sellers trying to sell it at low.
Okay, brilliant. Exactly what I want you to say. Okay. Yes. Guys, if you see that kind of a candle, you've got to be looking for some short side activity. The entire market's going to be looking for some sell side activity. But you need to know as a trader not to trade what you think, but trade what you see. Okay, so we pay for information, we look for shorts, we get involved in the short side initially. But we know in the back of our head that everyone is looking for sell side activity. And if everyone's looking for the same trade and it doesn't work out and then the shorts can't hold, what's going to happen? Okay. And that's why we can rally and take out today's highs tomorrow. Everyone understand that? Make sure when you do your hypothesis analysis, of course, that's very bearish. Okay, there's an opportunity for some sell side opportunity in the bonds tomorrow. But it'll only be sell side opportunity if the sellers can hold the buyers. If the sellers get overburdened and they get overpowered, okay, everyone's short. And people are going to be selling this all the way up. You can bet your bottom dollar there will be. Okay, so you as a day trader need to be flexible. Know that point where you're going to switch. Know that point where you're going to turn and go long because the locals are wrong. The locals are positioned badly again. Okay, good. Any questions about the book? Pretty straightforward. Stocks. Very simple. I love this stock chart. It's amazing. We've kind of come up. And what have we done? We built a base. We've gone again. And we built a base. That was the 17s. Okay, so what have we done today? We've gone again. So what do you think we're going to do over the next couple of days in the Euro stocks?
Retest of the highs.
Okay, so maybe someone's saying a retest of the highs. Well, the way I see it is this market at the moment goes up, then consolidates, goes up, consolidates. So the way I would see it, well, the trend should be go up and consolidate. Okay, so let the market find some resistance. Look for those candles that show resistance. Look for maybe that price action where you get high volume and no price response. Okay, and then look for some short side opportunities to start filling in another consolidation type pattern. Okay, that's what the market's doing. Consolidate, consolidate, consolidate. Okay, stick to the patterns, guys. Trends up. Pretty straightforward, and you can see it's building consolidatory type patterns. Okay. More importantly, where's the easy money coming from in this market? Where are these wonderful candles coming from where you get strong rejection? from the buy side. Okay, so look for those buy side opportunities early on in the Eurostoxx. Okay. Equally, remember, today the Eurostoxx showed what? It showed a little bit of performance. Okay, how's the US performing? How's Europe performing relative to the Eurostoxx today? Sorry, how's Europe performing relative to the US today? Okay, Europe's strong today. The US is a little bit weak. Okay, so how does Europe react tomorrow? If the US closes weak today, how does Europe react? Okay, again, same hypothesis. Traders will be looking for long side trades in the Eurostoxx tomorrow. Okay, so pay for the information. Put on those long trades. Know where you're going to switch. Know where their point is. Where actually today was just a bluff, and the market actually just got all the shorts out and it's going to do a reversal type trade. Okay, always plan both sides of the trade. We're long because the trend is long, because the market tells us it's long, because price tells us it's long. But we're only long so long as the longs can hold on to their longs. We're only long so long as the longs can hold on to their longs. Okay, don't forget that.